pressure on Trump seems to diminish when the market is doing well. When the market gets stuck in a trading range or begins to show weakness, that's when the Democrats like to go after him and start attacking, and that's when we start hearing the rumblings of impeachment.
Everyone, and welcome into CrushTheStreet.com. It looks like it is working now. I am joined today with Cliff Droke. He's a contributor to Financial Sense. We're going to be talking about the economy today. His website is cliffdroke.com. We'll have the links in the description. I just want to tell you, this guy is an authority when it comes to the markets. He's an editor of the Momentum Strategies Report newsletter and is published since 1997. And he's authored a number of books. So he's a real thought leader in the markets. And I want to talk to him today about the economy, precious metals, and stocks, and really what he sees going forward here in 2017. Cliff, thanks for coming on the line with me today.
Glad to be here, Ken. Thanks for having me.
Cliff, let's get your thoughts right now with your opinions on the sentiment at the moment with the markets. Really just, it seems like such a disconnect between the fundamentals and intrinsic value. And I want to touch on stocks here first, because that's like where everyone's pouring their money in to a large degree, at least conventionally. We're in this epic bull market since 2009, 2008, where stocks are just on the uptick here and money is pouring in. So let's get your thoughts there.
Sure. It's interesting, even though if we look at the charts of the major indices like the Dow and the S&P 500 and especially the NASDAQ, you see that meteoric rally, that almost historic rally from the 2009 credit crash lows that you mentioned. And it would be easy to conclude that we've got almost like a little bubble in formation, and perhaps the market is becoming vulnerable to another crash. But yet in many ways, I don't see quite the same exuberance in investor sentiment that we saw prior to the crash. It's true, investors, small investors, are beginning to slowly pile in to ETFs in particular, and there seems to be a growing interest in that category. And of course, tech stocks are becoming tremendously followed. But the thing is, overall retail investor sentiment is really not that bubbly right now. It's been neutral for quite a few months. People are still feeling, I think, the aftershocks of 2008 mentally. They're afraid to make major commitments, particularly in the NYSE stock market. We've got that little bit of a balance between perhaps some overvaluation in the tech sector, and the rest of the market is not quite as bubbly as perhaps it should be right now. So we've got that balance, and as long as interest rates remain low, I don't see any major problems as far as undermining the bull market in the immediate future.
Well, we were talking in the pre-interview here, and I thought it was real interesting. You brought up Trump, and obviously we see a massive effort to undermine him and to ultimately get him impeached by those who just stand opposed to anything he wants to do. So you mentioned having some thoughts as to what this could do to the markets, and I'm curious as to what those are.
Well, there is an effort right now in some quarters of the Democrat Party to have him impeached. As we speak, a representative named Al Green is trying to draw up our impeachment. I don't know how quickly that will proceed. I have a feeling that what we're going to see in the coming months is, as long as the stock market is rallying, which it is right now, you're going to see basically the pressure on Trump seems to diminish when the market is doing well. When the market gets stuck in a trading range or begins to show weakness, that's when the Democrats like to go after him and start attacking, and that's when we start hearing the rumblings of impeachment. So I think, strangely enough, his political future will be closely tied to the equity market. If they do manage to draw up an impeachment against Trump, it's going to obviously create a lot of volatility in the stock market. It's not necessarily going to collapse the market, because we've seen sitting presidents get impeached, and it doesn't always do that. But it does create volatility, and the recent mini panic we saw in the stock market, when the news came out about Trump and the Democrat move against him, that is what we can expect to see when the Democrats get serious about impeachment.
You know, one of the things Trump used to bring up is the fact that he might be in for he called the economy a big fat bubble. These were actual words coming out of his mouth. Now, he hasn't really said that while he's been the president. I think he's smart for doing that. When you're the leader of any organization, you don't admit failure. You know, it's got to be a positive thing. You got to have that optimistic leadership mentality and do whatever it takes to break through, because as soon as you admit failure, that's just a self-fulfilling prophecy. And we know that so much of the market, no matter what it is based on perception. And if people perceive a problem in a large degree, then you have that panic really set in. So it's possible, and even he has acknowledged the fact that we are in a bubble and that it could implode under his watch. And it seems like the Democrats would be very pleased if that happened. Any thoughts on that?
They most certainly would. I think there are a lot of people that would love to see the economy, if not the stock market, implode under his watch, and they're probably doing what they can to facilitate that. I don't know how successful they'll be, but I think the biggest chance they have in regard to upsetting the economy is to unsettle the stock market, because the two are so closely connected now that we live in essentially a financial economy. And if they can manage to unsettle the market later this year, and I've got to add as an aside, this year, based on my cycle work, I think we need to be especially watchful of the period between July and October. If there is going to be any significant weakness in the market, it's likely to occur during those months based on the cycles I follow. So if there is a big market down move, I think the Democrats will certainly capitalize on that and do what they can to unsettle Trump.
You know, a lot of people who have supported Trump and who are concerned about the markets are following precious metals. And over the last few years, precious metals haven't exactly performed amazingly. And in fact, in the last few years, exactly, I mean, it's up some from its 2015 low, December 2015 low, but it's not performing the way the money supply has expanded since 2008. Certainly, we're not seeing that. And I want to get your thoughts on precious metals and where we are now, and if you see them as a good buy.
Well, that's a timely question, Ken. And, you know, gold, depending on how you define a bear market, you could almost argue gold has been in sort of a bear market for the last 6 years. And it certainly has not benefited from the money supply increases, as you mentioned. I think it will benefit. The gold price should benefit, strangely enough, from what we've talked about, Trump and the political controversy that surrounds him, because we've noticed that when Trump is being attacked by his political foes, gold is supported. Gold, at the end of the day, at least in my experience, is a safe haven. It's something investors run to in times of great uncertainty, and it benefits from investor fear and uncertainty. And as long as people are uncertain about the political future, gold is going to receive a safe haven bid. And I think we can probably expect to see gold remaining certainly well above its December 2016 lows, and probably gradually creeping higher as the year progresses. I don't know that we're going to get a runaway move in the precious metals, but I do believe gold will remain fairly buoyant for most of this year.
Yeah, you might have seen this news. Gold and silver bullion now treated as money in Arizona. Arizona Governor Doug Ducey signed into law a bill that eliminates capital gains taxes on gold and silver, thus allowing Arizona residents to use precious metals as currency instead of Federal Reserve notes. We've seen states like Utah and Oklahoma having similar laws passed. And I'd like to get your thoughts on the implications of this. I know the federal government benefits from being able to print massive amounts of money and a stable fiat Federal Reserve note. So it's interesting that a state is acknowledging precious metals as money, which is competition to the fiat dollar, which is largely in trouble, many would argue. So any thoughts on that?
It's too early, I think, to make any projections as to the future of gold as money. I think the government is obviously going to do everything in its power to suppress the idea that gold and silver can be used as currency. If this movement among the individual states picks up any steam and other states beyond Arizona begin embracing that approach, I think you're going to see the government become more proactive in trying to stamp it out. I can't see gold ever returning as a major, monetary standard. Although, I don't know. It'll be interesting to see how far this movement spreads. But I think ultimately the government will make sure the dollar remains king.
Sure. Well, it's also interesting. I mean, states are unable to print their own money, so they're limited in what they're able to do. It's the federal government that creates those budgets, and it was more along the lines of being able to print massive amounts of currency, fiat paper. But we do have certain politicians who seem to be for the people as opposed to the government, and Ron Paul being one of them. Maybe Doug Ducey is another one of those individuals who are saying, hey, we want something sound, and we're going to put the people's interests over the government. And maybe there's just some fractions, some problems, some internal conflict where there are politicians that are really out for the good of the people. Any thoughts on that?
Those fractions could actually grow and increase if the economy began to rumble. If we started to see, I think you probably see a growing call in favor of the smaller factions right now for things like precious metals in lieu of currency. But the problem is, if the economy, I'm speaking in long-term terms here, if the long-term trajectory of the economy remains up and the economy continues to strengthen, I think eventually the factions, the minorities, will go by the wayside, and eventually the dollar people will accept fiat currency, which is what they tend to do when things are going well. If you'll notice, people question fiat currency when the economy is not doing so well, or when their individual livelihoods are not doing well. That's when people look around them and start questioning things, politically, financially, economically. But if the recovery since 2009 continues to build steam and momentum, I think the minority view, the ones that are trying to exalt gold and silver, will not win out. That's just my hunch.
Sure. Yeah, there's only so much pain that people can endure, especially if gold and silver don't perform until they give in. Now, it's an interesting point that you made up, that people start to look elsewhere in times of trouble, and Bitcoin was actually birthed, in and after the 2008 financial crisis. The whole Satoshi paper was written up in that time, and Bitcoin came online, and it really followed the financial mess of 2008 in a time when people were looking for some answers to what was perceived as a problem. I think the fiat currency system is a problem, and I find it interesting to see what's going on with Bitcoin. We cover that a lot here at Crush the Street. And speaking of that, we've seen Bitcoin move tremendously over the last few months, really. I mean, it's hit $2,700 this morning. It's corrected some since then. Maybe we're going to see a big correction. Who knows? Maybe 2,700 was the top. But I bring that up to say that's the kind of moves that people are hoping to see in gold and silver, especially with the way we've seen the money supply take off. And I think people are getting frustrated just seeing gold and silver range bound and not reflecting the problems in the economy, the debt, and the things that the reckless governments and the negative interest rates that the world was seeing, the insustainability, really the breaking point of this bubble in many ways. And yet gold and silver hasn't reflected that yet, and I believe they will. They will have their day, and I think it's important to have a position in it so you are in the middle or in front of that train before that train leaves the station, because just like people who wanted to get in Bitcoin, who said they would, or sat on the sidelines and then had to buy at much higher prices in a frenzy, they could have bought at a much earlier time. And I think gold at a 1,200 and 1,250, silver at this range, 16, 17 bucks. I mean, that's Bitcoin at $200, $300, $400. Any thoughts on that?
Well, you've made some excellent points there, Ken. I think your rationale for why Bitcoin has performed so spectacularly makes a lot of sense. Some might be tempted to say speculative bubble. I wouldn't say that necessarily, and I think your explanation for it is probably true. People are just frustrated with the lack of action in gold and silver. They are looking for an alternative currency, and right now, Bitcoin fits the bill. As far as gold and silver, I agree with you. It's important to have a long-term position in those metals. I believe the day will come when the precious metals will perform those who have that long-term position. It might still be a ways down the road. It's certainly not going to be a case of instant gratification. But, eventually you're going to see the type of move in gold, and especially gold, that will justify the long-term bullish standpoint.
Sure. And I think it's going to have those moments where it goes up and it keeps going up, because we're so conditioned to just seeing it essentially range bound, go up, then come back down, and then go up and come back down. And right. In Bitcoin, we actually experienced what it's like for something to go up, and not slow down. Of course, there's going to be a massive correction, and maybe we'll even call it a crash. But I think that's what people want to see, especially for those who are positioned now. They'll want to see that, and I think that day is going to come, and it won't just be this move up and move down in this range-bound type scenario. Any final thoughts on that?
Well, I agree. When investors get into that frenzy mentality, which happens at every stage of a major bull market, you do see sustained upside moves. Right now, they're as far from frenzy in gold and silver as you can get, and that's the reason for the volatility and the lack of upward directional movement. Basically, nobody has a strong feeling for gold, and that's why it's range bound. But when they begin the light, and that when gold actually becomes subject to that forward momentum, you are going to see continual upside pressure. That happens in every market eventually. Yeah.
All right, Cliff, I want to get your thoughts on the direction of the economy. You've mentioned that the economy can potentially continue to improve. And I'd like to, I deal with a lot of college students and individuals graduating. And a lot of people are frustrated with their situations. Their debt is extraordinarily high as they graduate college now at record prices. By the way, when information is as free and inexpensive as ever, college education is as expensive as ever. And I think that's a major free market disparity right now. As a side note,
I agree.
Yeah, major issue there, and obviously supported by government and non-free market forces. But I'd like to get your thoughts. I mean, the quality, the standard of life that you see going forward for millennials graduating now, dealing with the current economy, massive amounts of debt, and just this globalizing world where many things are being automated and shipped overseas. Is the good old days behind us for the U.S.?
Well, that's the million-dollar question, Ken. And I don't pretend to I certainly don't pretend to have the final answer. My feeling on it is, first of all, let me make this comment. I agree with you regarding college education. If anything right now can be said to be in a bubble, I think it's the college, basically academia, because it's being touted and promoted more heavily than I've ever seen it before. As you said, it's more expensive than ever before, and it really makes no sense when you can actually get essentially free education if you care to look for it on the internet. So you can learn a lot of things that are applicable in the real world without necessarily an expensive college education these days. I feel that it's overvalued, and it's a shame that these students are coming out so heavily indebted. I know from experience it can take years to pay down college debt, and that is going to hinder them. However, as the respected Wall Street economist Dr. Ed Hyman has pointed out, millennials are slowly, gradually starting to come out of their parents' basements. They're beginning to slowly enter the economy. I think he said the growth rate for millennials in the economy is somewhere along the lines of 3% versus 1% for the rest of the economy. So they're coming out, and because they represent the largest demographic group in America, I mean, they're the biggest generation since the baby boomers. When they hit their stride economically and they start working full blast and start buying homes and doing the things that the baby boomers did, we could have another long-term economic boom on our hands. Now, I don't see that happening anytime soon. It might take quite a few more years before we see that. And in the meantime, we're probably going to see more of periods of economic uncertainty where people are not quite sure where the economy is going. But I do believe there is hope long-term for the millennials. I don't think they're necessarily doomed to a substandard American way of life. I think there's hope for them economically. We'll have to see how it plays out.
Yeah, and what sort of mentality is that for anyone to live on a micro level for your own life, to say the future is going to be worse than the past? And what sort of hope does that give anybody? I mean, if you think that your future is going to be worse than where you are right now or where you were in the past, you're not going to have that motivation to wake up each day. And that's self-fulfilling as it is. And I believe in the power of forward momentum and a rising tide mentality that makes you successful in whatever it is you want to do, despite the macro problems. Of course.
Of course.
Yeah, absolutely. Cliff, so I'd like to just get your closing thoughts here. I mean, where are we at then? I mean, what can we expect going into 2017, 2018? How should people, or what should people walk away with after listening to this interview? Well,
I hope they walk away with the idea that when you're examining the overall tides, as you mentioned, the tide of the economy or the stock market, you got to look at more than just the surface, more than just, for instance, the charts or the fundamentals. You got to look below the surface to see what's really happening. And when we look below the surface of the current stock market, there are some disparities. There are some negative divergences that might come into play later this summer. So my final thoughts would be, just if you're an investor, if you're currently long this stock market, and there's no question, long has been the correct investment position this year. But I would urge them to just be cautious heading into the summer months, because unless the market internals improve significantly, there could be some extraordinary volatility, particularly between the months of July and October. And it'll be interesting to see how this plays out, and especially as it plays out in relation to Donald Trump and the attempts to, shall we say, discredit him by his opponents. So those are a couple of things that I think your audience should be on the lookout for. Potential market weakness in the July to October period, but otherwise, this has been a bull market year. And whatever weakness occurs during the summer months, I think it's actually going to serve as another buying opportunity later in the year. Sure. So in other words, my final message is this long-term bull market, which began in 2009, isn't dead yet, and I don't think it's going to die this year.
All right, Cliff. And if people want to learn more about you and what you do, where would they go and what would they find?
Well, my website, as you mentioned, is cliffdroke.com. That's, by the way, Cliff with one F. CLIFDROKE.com. And my writings, as you also mentioned, are available on Financial Sense and other websites. And my books are available on Amazon.com. I mainly write for traders who focus on technical analysis and technical type trading as opposed to fundamental trading.
Good deal. Well, hey, thanks for coming on the line. You're a real thought leader, and I appreciate your comments and educating us here at crushthestreet.com.
Anytime. Thank you, Ken.